All right, good morning. Today is February 7th, 2024, and I'm back with another edition of the Wednesday live show. Take a quick look around the markets and lots going on. Um, as you know, the Fed, as you know, Powell, left interest rates unchanged, which was expected, but threw a little bit of cold water on the idea that they were going to be aggressive in lowering interest rates, which was kind of interesting. And so, it seems like for the past 2 years, the market has been pricing in or anticipating some sort of pivot or lowering of interest rates or loosening of financial conditions. And as long as I can remember, for 2 years, um, the Fed keeps saying that they are going to stay higher for longer, right? And all these Fed heads talking heads from the Fed, of which I think there's a couple today. So this is a big week for Fed speak, and of course Powell was on 60 Minutes last Sunday and basically reiterated what he said at the press conference, is that they believe that it's March is too early to lower rates. So the funny thing is that I can remember like spring or summer of 2023, and you can see the rallies on the chart, which we'll look at in a minute, but of people talking about a Fed pivot like way back then. And so, the market keeps rallying on, and I don't know if it's the news media, the financial media that keeps, perpetrating this idea or what, but I mean, all these rallies that have occurred based on the Fed, reversing course and lowering interest rates have all come to naught, yet the market itself continues to rally. I want to start this week with the weekly chart because look at that. S&P 5000, right? S&P 5000 is just is right there. So, um, haven't quite hit it yet, but geez, it seems sort of like almost a gimme, but you never know, right? I imagine that CNBC's probably already preparing the graphics and preparing like the special for S&P 5000, which is a huge big deal, quite honestly. Wasn't that long ago, right? 2022, right here, it touched 3,500, and that was the big bear market of 2022, which I'm not sure a lot of people expected. Of course, at the beginning of 2022 is when the Russia-Ukraine war started, and that kind of threw a damper on. Well, I guess that's the excuse for the big sell-off. That in combination with the fact that the Fed was embarking on their big rate hike cycle, so taking interest rates from basically zero to 5.25, 5.5%. And so this is the big picture here. The pandemic sell-off, which was in the history books, there's going to be a chapter about that. That was an historic sort of event, right? I mean, global pandemic, right? Um, and then the Fed literally, I remember the articles. They slashed interest rates to basically zero over these. This is a weekly chart, so over the course of about 4 weeks, especially right at the beginning of the pandemic, and quite frankly, I remember prior to that, the market was ignoring. You remember Trump was president back here, right? And so the market was ignoring like what was going on in China. Meanwhile, I was watching videos of people dropping over in the streets, and the market was like pretending that it was going to be no big deal. Um, and so, the administration was saying, "Oh, it's not going to be anything here. It's nothing, this and that." And then of course, it turned out to be a big deal. And basically, this stretch of the market reversing here is all due to the Fed going absolutely bonkers. And it's funny that just recently, not that long ago, I forget which one, it might have been Powell, which one of the Fed speakers said that in hindsight they may have overreacted, right? Which basically meant that they slashed rates to zero and they created, you know, they watered down the money supply by like 20% or something, or maybe even 40%. I lose track of these numbers, but um, the old definition of inflation is the definition of inflation, like back in the olden days, was was creating money out of thin air. They were inflating the money supply, and so rising prices were the result of inflating the money supply, right? And so, all throughout history, countries have, sort of, um, well, I mean, if they've watered down their money supply, right? Created more and more and more money to sustain things, and the result of that is rising prices, which kind of makes sense. So, anyway, long story short, so I don't know what they were thinking, but it was because of the pandemic that they, just created, oh, I don't know, $6 trillion or something, trillions of dollars. They basically, increased, and that's where their balance sheet came from. And so the result of that was all those trillions and trillions and trillions of dollars of new money had to go somewhere. And, some of them, they found their way into the equity market, right? And so this is basically, probably from the pre-pandemic high up to, the peak at the end of 2021 was probably just an adjustment for the amount of M2 money in circulation. So recently I've seen some charts where people are saying, M2's pulling back a little bit. So yeah, if you increase the money supply by 20% and then, it pulls back by 3 or 4%, it's just it's almost like a rounding error. But anyway, regardless of all that, so we all know what transpired, right? And we had the big bear market of 2022, and then just about at the point of maximum pessimism, right, around 3,500, we got this little bit of reversal, and lo and behold, it's turned around and it turned into this big giant cup and handle, and we're looking at, fast forward to now, we're looking at S&P 5,000 practically in the bag. So it's never that easy, right? It's never as easy as you would think. So quite frankly, I mean, I'm surprised that we haven't hit it yet. Let's see. Yeah, really, really close here. So we've got this. Interestingly enough, last 2023. Right? Let's just back up a little bit here. 2023, the market had a terrible 2022, right? Which is sort of an outlier. I mean, yeah, there's down years here and there, but 2022 was pretty nasty compared to what everybody thought. What everybody thought was going to happen. Of course, the industry professionals are paid to be optimistic from year to year. But anyway, it was kind of crazy because at the beginning of 2023, it's like someone flipped a switch or something, and then all of a sudden they started buying, and especially, starting with the highest market caps on down, and pretty amazing. So anyway, 2023, started off with a bang, big round of buying, and then, a little pullback, and then for whatever reason, I believe that this summer rally was the result of what I was talking about before, where, they started talking about a Fed pivot, this and that. And so, huge rally into August, and then this particular pullback from, actually into August, and then starting in August, we got an actual, correction of some sorts, right? And then, of course, like on all my longer term charts, I have a trend line drawn across those highs. So this is what's pretty astounding is this run from November, right? Like I say, it's almost like someone flipped a switch or something. So I have a few theories. One thing I wanted to look at was there's been a lot of talk about the China market. So let's look at this FXI here on a weekly chart. This is a mind blower. So at this point, um, global money from all around the planet is looking for, the best return, and so I would guess that right now that's the U.S. stock market and the mega cap stocks. And look at this. This I guess this is a pretty good proxy for China. I mean, we know that money tends to go into the large cap stocks. So look at this though. This is shocking, right? Um, since when is that? I can't even tell what year that is. Yeah, 2021. So the Chinese market peaked, in 2021, and here it is, 3 years later. Wait, one, two, yeah, 3 entire years later, it's basically, it's down significantly. Now, of course, there's different markets in China, and I don't know how well. Be honest with you, I mean, I don't know how well this represents the overall Chinese market, but it's pretty nasty. If you look back, I mean, you're talking years and years and years ago, right? It was at these same levels. So anyway, my point here, not to belabor this, is that my point here is that if money's been coming out of Chinese equities for years, then perhaps, it's finding its way into the U.S. market. Let's look at the Qs here. The Qs, wow, pretty amazing. Well, there we go. Pretty amazing. Same cup and handle pattern. This is a weekly chart. I flipped over to the weekly. Same cup and handle pattern, and the same sort of pattern as the S&P, only stronger because, as we know, the tech stocks are the place to be. Quick look at the IWM. I've got charts that are marked up with all sorts of marks on them, but sometimes it's kind of nice to just flip through them and look at this without anything drawn on the chart. No trend lines, no boxes, that type of thing. IWM's kind of struggling a little bit here. I mean, it's kind of you gotta go, even if you go back to like the end of 2020, right? It's well, just call it the beginning of 2021. So I mean, we've been poking around those levels here on the Russell, poking around the levels that, oh wow, did the S&P just hit 5,000? Anyway, Russell 2000, big box up here. Well, actually, let me just pull up my chart here. It'll probably look better. There we go. I think there we go. That's the chart that I was looking for. No, S&P, the ES hit looks like it hit 5,000, but the S&P still got a little ways to go. Anyway, you can see the past couple of weeks, I don't think I zoomed back all the way to this support level, but that's pretty uncanny, right? The pre-pandemic highs in the Russell 2000 were like absolute rock solid support, 2-3 years later, which is interesting in and of itself. And also, I had extended this out. I guess, whoops, it's a little tricky to do here. There we go. That's what I was looking to do. That's sort of that box that goes all the way back to Let me save that because I wanted to extend that box. That box goes back and encompasses basically, all of 2021. This fake sort of breakout is kind of interesting, to be honest with you. Um, because you figure if something like, say a stock spends, a certain amount of time consolidating in a range up and down, up and down, and up and down, and finally breaks out like that, you expect one of two things to happen. You either you know, expect a big rally out of there that gets some traction, kind of like, this breakout of this high, or you expect that it comes back down and sort of retests the breakout, then continues the trend. But this was the absolute opposite. I mean, this was a huge technical breakout and we're talking back here in 2021, of course, huge technical breakout that just failed, right? And I'm sure at the time nobody expected that because it's unusual to see that, right? And especially, since this is such a large time frame. But anyway, um, interestingly enough, and I don't want to mess up my chart here, but this is what I find kind of interesting. And so this recent high here, and you know what? I'm just gonna save that for a minute here because so this recent high that we just saw, at the end of last year, the beginning of this year, right, is right. It sort of failed like right at the same spot that was the high of 2022. I mean, give or take a couple of pixels, right? Um, so that's kind of interesting. So this was the big channeling resistance point, and of course this was the mega support. But it is kind of interesting how we just saw this little sort of peak high right here. So, years ago, all these years we've been doing this, and all these years, we started off doing something called a radio show, and man, we did this before the term podcast had even been invented. Before people had podcasts, we had that. Some of you guys may remember we had the Wednesday night radio show and all that kind of stuff. But anyway, um, losing my train of thought here. But as long as I can remember, I have been talking about the Russell 2000 kind of being the proxy. I shouldn't say leading. I should say being the proxy for the average stock. And I'm not sure if that's really so true anymore. Um, we've been through a lot of periods. We have been through a lot of periods over the years that it seemed like the mega cap stocks, it seemed like it was a narrow market, right? The high tech mega cap stocks always seem to lead. And obviously, that's where the money goes first. Indexing was a huge thing back in the 90s, also, just like it is now, right? And so, people would put money in the stock market via the major indexes, but, ETFs and or indexes, back then it was mutual funds, and then so, all the money that goes into the market, say on a weekly basis, the first place it goes is the mega cap stocks, Microsoft and Apple and Google, Nvidia, all the mega cap stocks. So you can start with that, and of course, we all know that the Nasdaq is, of course, they rebalanced it recently, but the Nasdaq and the S&P are significantly weighted in those mega cap stocks. And so anyway, long story short, over all the years, I always sort of looked at the Russell as kind of, an aggregate of what just basically the random average stock looked like, right? And so I'm not sure if that still holds true as much as it used to in the past, but anyway, my point is there's a lot of stocks out there and so we've during this rally we've seen here. I mean, I could go through my list of stocks here, and I could dozens and dozens of examples of stocks that are nowhere near their highs of past years, even though maybe they've had pretty decent rallies. even though maybe they're coming off of lows, and tons of stocks really got beat up, especially on that pullback to 3,500. Let me go back to my just normal S&P chart. So this pullback here that last October, right? Tons of stocks sort of kind of bottomed out around there, and then it's like someone flipped a switch or something, and maybe somebody I won't say somebody, but maybe the thought process was, hey, wait a minute, okay, now we're exactly 1 year away from the next presidential election, and so it's time for the market to rally, right? It's going to be interesting. Today could be the day. Today could be the day that we see S&P 5,000, or maybe they save it for, what is today, Wednesday? Maybe they save it for tomorrow or the next day. But S&P 5,000, I mean, is a huge, major milestone. But let me reiterate: if you go to the CPI calculator, right? I say this every week, but it's just kind of fun. It's not funny. It's just true. And so, we just recently broke out to nominal new all-time highs in the market, right? And it also kind of goes against everything that makes sense, right? The old saying, the stock market, the economy is not the stock, but stock market is not the economy. The stock market is not, the geopolitical situation, all that. It's just kind of crazy, because it seems like, everything is in chaos, and for the market to be at all-time highs when it seems like the world itself is, I don't know what the proper term is, but I mean the deficit and the debt and all that stuff, and the inflation that we had, and the only thing I could think, and of course the geopolitical tensions, the wars out there, all this stuff going on. It's just kind of crazy. It's kind of crazy to me that I mean, it's just bad news after bad news, and it seems like everything is more dysfunctional than it's ever been. That's the word I'm looking for. Society itself, society is more dysfunctional than I can remember. Politics more dysfunctional than I can ever remember. Of course, I despise politics in general, so I, I am not gonna have any political discussions at all, because I think it's dysfunctional. I mean, if you take a step back and look at the state of the planet, and now all the saber rattling and the missiles flying and that, and the countries, wars and that. I mean, most of my life we didn't really have that kind of stuff going on, and so it's the whole planet is extremely dysfunctional, right? Climate change, all this stuff. I mean, everything is just nuts, and of course, social media is just amplifies all the bad stuff. Um, anyway, I don't want to get off topic here. So, S&P 5,000, we could literally, I'll be done with the show here and we could see that. It's going to be interesting to see if CNBC does a big special on it. By the way, I mean, I still flip on CNBC and have it on, but I have really ever since they changed it, here recently, like a month or two ago, they changed the ticker again, and I can remember back in the day, way back in the day, when the CNBC ticker was actually useful, right? I mean, back when stocks traded in fractions, um, and that tells you how long I've been doing this and watching CNBC. But back when stocks traded in fractions, they'd show you the ticker symbol and the price and then the change, and they were flying by. I mean, it was quick, and it was almost like you could watch the ticker and kind of, it was like people watching the tape now, like order flow or something. You could watch the ticker and you could see, kind of get an inkling of what stocks, where the action was, and that type of thing. And so over the years, the ticker's gotten less and less and less useful, and now it's just completely useless. There's nothing you can, of course, that makes total sense because everybody's got a watch list of stocks they can use in that. But ever since CNBC made this latest change, it's just hard to watch. And over the years they've been going downhill and downhill more and more. And then, at this point, it's so redundant. They have the same people on, they talk about the same stocks over and over. It's just the same shtick, and quite frankly, about I'd say 80% of it or 90% of it now is just them getting, like, people on talking their book, right? They come on and they talk about, the stocks that they like and this and that, and they literally talk in their book. So some of you, I don't know if some of you may remember Dan Dorfman. There was a guy named called Dan Dorfman. This is back when stocks traded in fractions, and he'd come on CNBC like with a couple of segments and mention a couple of stocks that, people he was talking to. And man, while he was talking live, those stocks would just start ripping higher, right? People would wait for Dorfman to come on, and then they'd start talking about, this particular stock. So it was crazy, crazy stuff. Anyway, he was kind of like the precursor to Kramer, I guess you could say. So what reminded me of it was all this talk about this SMCI. This is kind of, well, this is just sort of reminds me of that whole era, right? I mean, look at this thing. So if you take the recent rally off the chart, let's just go back in time here a little bit. I guess this is the big AI play now or something like that, but good business, this and that. But look at this. So, here's August of 2020. I guess this is August of last year. Let's see. But anyway, look at this. I mean, big rally. This is a $100 stock rallied up, and then they must have missed earnings or something, but kind of a thin stock. So look at how this thing traded, right? I mean, it was just kind of, a lot of sideways price action. And then at the beginning of 2024, kind of like I was talking about before with, all of a sudden, like at the beginning of the year, money started going into tech stocks. And I mean, look at the rally. This is a daily chart, right? Kind of interesting here. And I don't know if this was earnings or that to me looks like, an earnings drop right there. So look at the volatility in this thing though. But anyway, all of a sudden here in the beginning of this year, and that was like a beautiful pattern there. But this stock, may or may not have been on people's radar. So, but here's the thing about it is, so all this is well and nice, and so right here it was kind of up against the prior highs, and then all of a sudden, like this right here, and I don't know. I mean, I don't know what the news was there. I guess I could look it up, but then look at what's going on with this. This is what reminds me of, like, the .com days. So this stock has literally doubled. 2, 4, 6, 8, 10, 12. We're on day 14 here. I don't know if, like, there was shorts in this stock, or if, all of a sudden this turned into the new Nvidia. Now, I do know that they released earnings recently, and so, there's been a lot of talk about them and this and that. So, but I mean, that's just incredible. This is like .com type behavior. So, crazy stuff going on. Anyway, keep your eye peeled for S&P 5,000, right? Oh, practically ticked it while I said that. So that's going to be a big thing, and get your S&P 5,000 hat on. Keep in mind, I'll leave you with this. My time is up here. Keep in mind that S&P 5,000, or I'm sorry, the S&P 5,000 is not an actual all-time high, inflation adjusted. We need to be at about need to be at about 5,300 for an actual inflation adjusted all-time high from the beginning of 2022, right? So you can plug it in the CPI calculator. You know, it was a 48.18 back here. So 48.18 had back at the beginning of January 2022, um, needs to be about 5,300 today to have the same purchasing power. And so, and a lot of what we've seen, this rally could just be based on the idea that the stock market, in some semblance, its job is to keep up with inflation and keep up with purchasing power. So far, it has not kept up with inflation if you're talking about the absolute peak, so everything about this, chart, it just is a good example of why the big winners in this market are the 401k people, the working people with their 401ks, and they're contributing money every month into it, and the employer's matching them. And so they were, and not paying any attention to the market, just accumulating shares over all this time. And so they were, dollar cost averaging wins in the long run when you're talking about longer term investing, and especially dollar cost averaging into index funds too, because the whole market cap weighting is working for it. So today is potentially an historic day. We might see S&P 5,000, and it's going to be interesting to see what happens once we tag that. So it almost seems like a magnet at this point. So anyway, thanks for tuning in. I'll see you back here next week, and we'll see what happens after the S&P. It's